All right. Hey, everyone. It's Monday. You guys should be able to hear me okay over here. All right. Welcome to the stream. I'm Mark P. Markets, Mark Principato. And today we're going to use the Trade Scanner Pro once again to look for trades on the NASDAQ futures, right? I don't have that up here right now. I have Bitcoin up here. I have to adjust my charts. But we could just touch on Bitcoin really quick. I haven't checked the economic calendar yet. I am streaming today again at 3 p.m. Eastern time. So that's usually when I go over that sort of thing. But if you're new to the stream, welcome. So this is what we're going to do here. I'm going to pull up the NASDAQ and we're going to look. First thing we're going to do is we're going to do our evaluation, which is we look for trend structure and then we look for levels. And then we go to our smaller time frame and we look for confirmation from the Trade Scanner Pro, which is a trade signal. So when we're using the Trade Scanner Pro, we don't look for the signal first, like we see on this chart over here. We do our analysis first, and then the signal comes second because signals can be random. So we want to align with the bigger picture, and that's the whole point of using the Trade Scanner Pro. It's a confirmation tool, okay? So first thing I'm going to do here is I'm going to change these. Actually, before I change the charts, let's just take a quick look at Bitcoin, right? This was the analysis that I published yesterday. And I'm anticipating a test of like the higher 88K area. As you can see, it's still fooling around in this midpoint area, right? So anything can happen here. But if we look at this hourly chart, I mean, look at this. There was a trade signal, I guess, 10 hours ago or something? There was a trade signal here. It's been in play for a number of hours. And look at the trailing stop. It's cut the risk in half. And this thing is almost at the profit objective. It's pulling back now. But just letting you know, I mean, this thing calls good signals, right? And this thing, you could have worked on the long side here if you were looking at the hourly chart because there's nothing but higher lows here. Even though you're in the midpoint of the range, like I said in my analysis, momentum continuation, right? Looking for longs. This is a momentum continuation. This momentum, even though you're at the middle of the range, is still bullish. And you're coming off of this failed low double bottom situation. So there is some room to the upside. And the Trade Scanner Pro tells you, well, this is a reasonable profit objective, right? Right there. So anyway, just wanted to point that out. Let's go over to the NASDAQ, shall we? Because that's what we're doing here. So I'm going to go to the MNQ1, right? That's the continuous contract on the NASDAQ futures. And then we're going to change this one over here too, MNQ1. All right. Feel free to say hello in the stream, by the way, my YouTube people. I'm streaming from the greater New York City area, also known as Northern New Jersey. All right. Let's see how many people are watching me. Oh, I like my a dose of depression over here. Let's see. Okay, I got my usual. A little bit more on Twitter. Same 5 people on YouTube. 6 people. Feel free to say hello. It'd be nice if I got a few more people watching. But anyway, I know there's 10 million people streaming right now and all that other stuff, and they're much more entertaining than I am. But I still think I deliver some value. And it's the same 6 people, so obviously someone likes something. I'm doing something right. Hey, how are you? From Dallas. All right, Dallas. Dallas, Fort Worth. I love Dallas. All right, boy. Got to wear my cowboy hat. It's my Dallas impression right there. No, Dallas is a nice place. I got to spend a little time over there. Hey, Andrea, how are you? All right, so now, when we're doing this Trade Scanner Pro thing, like I said, the first thing we have to do is we have to get some perspective. As you can see, there's a signal on this 1-hour chart, okay? But I'm not doing anything with that, right? There's nothing to do here. You don't jump on a signal. This signal's been open. This is a 1-hour chart. It's been open for a couple of days, right? So, again, we start with the perspective. Now, I'm going to change this time frame to a 1-minute chart because that's the time frame we're going to be looking for signals on for day trades. Now, by the way, the account that I'm using here, in case you don't know, if you're not familiar with the stream, I'm using an Apex evaluation account. The goal of this stream is to document every trade that I take to see if I can beat the evaluation. The objective for the evaluation is $3,000. All right, I'm right now on this account, I'm break even. Okay, if I pull up the account over here, you can see my P&L is at 49,998. All right, so this was a 50K account, and I was minus like 8 something, and I spent the previous week making that money back, and now I'm basically at break even. Now, this is not the technique that I'm using here. The strategy that I'm using is not the fastest way to beat an eval, but the goal is to be sustainable so that if I can reach the profit objective, then I can get payouts on this money. The thing is, I want a sustainable strategy so that if I can beat the eval, first of all, if I can prove to beat the eval, then I know my strategy can at least lead to payouts. If I use one of these high risk strategies that is basically meant to beat the evaluation in a couple of days, the thing is those strategies are not sustainable. So it's not going to really do me any good to beat the eval in a couple of days and then go in, pay a registration fee, which is like another $140, and then blow that account, right? Because it's not a sustainable system. And then I have to start over again anyway. So I'm taking the slow route. And that's what this is here, right? So I only trade this account when I stream, Monday, Wednesday, Friday. I don't trade this account otherwise. So every trade in this account was taken in front of people. So there's nothing behind the scenes, right? Like a lot of fake gurus like to do is, hey, I beat my eval, right? But it's behind the scenes, or they record something after the fact and they show you after the fact. There's a lot of tricks that you can play on people to make it seem plausible, but you can't really trick people on a live stream, right? So anyway, just wanted to mention that. Now, this is my daily time frame. So let's begin our analysis here, right? Because we want to get perspective. I'm only looking at 2 components. Those of you that follow me know what I'm talking about: trend and levels. That is all you need. One of the things that I mentioned in my analysis that I published yesterday was that as retail traders, we trade with a blindfold on. There are people out there who have way better information than us. So they're going to use that against us. And most of the time, this is why retail traders lose. It's because we're making judgments on irrelevant information, okay? And there's lots of it. News items, oscillators, all kinds of irrelevant, like just systems that have no advantage that people push on you. You get them from YouTube or Twitter or whatever, and it's all nonsense. The only 2 components you need to make adequate decisions are have a good grasp of trend and then know your levels. Because from there, you can then assign probabilities and quantify risk. That's all we can do. Everything else, you're just wasting your time and energy on. All right. And I've been doing this a long time. I tell you, I repeat this all the time. It's amazing. People still don't listen. And it's because people need some sort of, they're grasping for certainty. There is no certainty in this game. We're playing a probability game. What we want is a higher probability of a profitable outcome, but there's never a guarantee. So that's why risk management has to be a top priority, because much of the time we're taking 50% probability outcomes. Not all of the time, but a lot of the times that's really where it's going to be. So if we're going to win, we need to win more than what we lose if we're going to get ahead, right? Those are all very important considerations when you are working a system. Now, it takes some time to get acquainted with a system and the moving parts of a system. But, if you go the trial and error route like I took, it takes a really long time because you have to figure out all the stuff that doesn't work first. And I'm trying to save you the time. Most things don't work, okay? Because if they worked, then everyone would be making all kinds of money. And you say, oh, but they are on YouTube. No, it's all fake. Okay, most of the people on YouTube and on Twitter and on TikTok and all, they're not making money from the markets. They're making money from affiliate links, selling training programs, and all that kind of stuff. That's where the money comes from, not from the markets. They show you random trades that work out, and it looks like they're doing something. they fool a lot of people, especially beginners. So I hope to open your eyes to that. And many of you heard this rant before, but I just have to remind you regularly. All right, let's get to the analysis here. So this is my daily time frame. The only things I'm really looking for here are just like levels, because the trend on this time frame is not going to be helpful for day trades. And I'm looking to take day trades. So I have, this is the current candle right here. Here's Friday's candle over here, right? So I just want to note those levels. Friday's low and Friday's high. I just want to be aware of those levels. All right, because as you can see, the overnight low or whatever has basically touched the Friday high. That's interesting. So that's a level. Now, that's all I need from my daily time frame. Let's go to the hourly chart, because the hourly chart is going to help give me some more context here. All right. Now, as you can see here, those lines that I drew, that was the previous day's low and high. Now, here's the overnight price action that we have in this blue area. That's the overnight price action. So in that area, as you can see, the lows of that area are basically almost touching the highs of Friday. I could basically put a line right about there. And that line coincides with some price action going back here. I mean, look at this. This is not coincidence, okay? This is not coincidence. Volume transacted over here, and that was a resistance which we gapped above, and now it's acting as support. That's common behavior. So that's an important note, all right? And as far as resistance goes, we have this overnight high right here. That's it. Now, at 10 o'clock, at the 10 o'clock close, we will have our opening range. And there's a lot of opening range breakout people out there that, once those levels are established, then they start working with that. There is some statistical relevance to opening range breakouts, but if you use them in a conventional way, you're just going to have problems. All right, trust me, I've worked with it, and it's cool when it works, but it's very random. And so it can give you some useful information, like levels and stuff like that. But as far as trying to play the breakout, it's not as simple as they try to make it out to be. All right, so I'll just mention that. But it is, if you understand how to use that information, it can give you some insight. Now, I've talked about levels here, but what is our momentum? Right? Usually I should answer that question first, momentum. And as you can see, we have a higher low. All right, remember, this is our hourly chart. I have a higher low. I have a higher high. All right, I have barely a higher high here. That's sort of a failed high situation. We also have this high back here. This was the high up here, was the high of Wednesday, when, they came out and they said 90-day delay on the tariffs. Remember that? That was the peak. All right. So we haven't gone back up there yet, but we're trying to work our way back up there. These are resistance levels. Our current momentum is generally bullish. So what does that mean? That means that we can place a higher probability on a support level being maintained, and a higher probability that a resistance level will be broken. That's how we look at that. So I should be leaning on the long side, and I should be expecting supports to hold. Now, it doesn't mean it's going to work out that way. I'm just trying to align myself with the probability. I may buy a support and the support may break, or I may get stopped out once or twice first, right, before it holds. So that can always happen, but I'm still trying to align myself rather than reacting and saying, oh, outside bar, I'm going to go short, which a lot of people are doing right now. Does that make sense? Feel free to ask me questions in the chat, okay? If you want, or if I say something you don't understand, or if you're confused about something, just let me know. Because using the Trade Scanner Pro can be confusing. So I have my perspective. I have my levels and I have my perspective. So I should be leaning on the long side. Now let's see what my 1 minute chart tells me. Okay, so now with this, hold on, I'm going to change this now, this hourly chart. I'm going to change it to a 30-second chart. You know why? Because I want to monitor multiple time frames here. I want to take trades on either the 30-second or the hour or the 1 minute chart. That's where I'm taking action. Now, when you first get the Trade Scanner Pro, you got to make sure you turn these buttons on, because those are like the main functions. And when you get them, they start out off. So see, like the heads up came on and all that stuff. This is my 30-second chart now, and this is my 1 minute chart. Now I'm going into this with the idea that I'm going to be looking to confirm long signals. Now, do my smaller time frames agree with this idea? Well, my 1 minute does not agree. Look, it says trend is bearish. Interesting. Okay, so I got to note that. My 30-second also doesn't agree. Right? It says trend is bearish up here. See that? Now, these time frames, one of the confusing things about the Trade Scanner Pro, especially on small time frames, which is why I don't recommend it, these small time frames for beginners, is because this momentum changes a lot. And you have to be aware of the changes. Because if I'm trying to align with the bullish side of the market, but my momentum on these smaller time frames is bearish, then I need to switch to counter trend mode if I'm looking for long signals. Yes, that's confusing, but this doesn't happen as much on larger time frames like 5 minute or 15 minute, which is what I recommend for beginners, especially if you're trying to day trade. The reason why I don't use 5 minute on this stream is because I will have to wait hours for signals, and I'm not streaming for hours. I have other things I have to do. So I'm trying to get a signal within the hour that I'm working in here. And the only way I'm going to get that is on a higher frequency time frame, like 1 minute or 30 seconds. But it's a hard time frame to trade. I will admit that. And, if you're a beginner, I would recommend paper trade these time frames. Don't use real money. Don't pay for an eval account, and you're going to blow the account on these time frames. Practice first. Take your time and practice. There's nothing wrong with that. Okay, now look, for example, there's a short signal right here, right? Because when the momentum is bearish on my time frames, it's looking for shorts is what that means, unless I switch to counter trend mode. I'm not interested in short signals, so I'm going to ignore that, right? That's why we do the evaluation first, because I have to figure out what side I want to work on. If the Trade Scanner Pro doesn't agree with me, then I don't change just because the Trade Scanner Pro doesn't agree. I have to come up with the idea. My idea carries more weight than the Trade Scanner Pro. The Trade Scanner Pro is just a confirmation tool. Does that make sense? That's very important. I realize a lot of people, especially beginners, they make this mistake. And because most oscillators, most tools out there that people sell, they sell this idea that they're going to do the forecasting for you. And nothing can really do that. It's all nonsense, right? So people go into this expecting the same thing. Like, oh, here's a signal. It means something. It's this is the same as just a random candlestick showing up. So I'm not going to take this short because I'm not interested in shorts. I don't even care if it works. I'm not interested in shorts. We said we're going to align with the long side. Okay. So we'll just ignore this for now. Now, should I switch to counter trend mode? Well, let's see. What's happening here? Here's my 1 minute. Let's just take a little closer look at the 1 minute here before I do anything. We have this pullback situation and we have a lower high. Okay, that's bearish. Now, the thing is, we have a lower high, but we're going into this supportive area, right? We're starting to get into this supportive area. So this is it's a tricky situation. I'm going to lean on the long side because the bigger picture is generally, the momentum has generally been bullish, but we're looking at some bearish momentum. When it's conflicting like this, don't force trades. Now, I'm going to switch this to counter trend mode over here. All right, and we're going to take a look on the 1 minute. And now, see, look, there's a signal. It happens to be there. It's been open for let's see, it came up over here. It's been open for a few minutes, at least like 10 minutes, it looks like. See, that was the origin of the signal. And it's back at the buy line. See that? It's back at the blue line. So this could be an entry. Now, let's see. I like that candle. All right, I'm going to buy one contract. All right, I just bought one in the prop account based on that retouch of the blue line there. Now, my goal was to be long, remember. So don't be confused by the fact that we have a short open. This is a short signal on the 30-second. That can be very confusing. We're sticking with the plan. right? So I'm going to avoid the confusion, I'm going to turn that signal off. All right. Now, the short may be the right way, but the thing is, the 1 minute is going to carry a little more weight, right? The bigger picture is generally bullish, as we've determined. So support levels should be a little more reliable. Okay. Also, take a look at this. Just looking back here, we have this level over here. Was that the overnight low? No, that's not the overnight low. That's just a low. All right, so let's see what happens with this. I took one contract because this environment has been very wild, and normally I like to take two contracts, but I took only one to mitigate my risk. Now, let's measure how much risk am I taking anyway? I don't even know. 70 points. That's still a little bit high for the 1 minute, but this is a little more wild environment. But a week ago, this risk was defined at the 1 minute chart was showing 200-point risk, which is ridiculous on a 1 minute time frame. It should be more like 50 or 60. So 70 is close, which means that the risk is getting back to normal, is what that means. It means the candle ranges are shrinking. Okay, cool, right? That's the kind of risk I should be looking at, around 50 to 70 points on a 1 minute time frame. Now, my trailing stop is now beginning to appear. You see that? And if this trade just continues my way, if it could sustain itself, the trailing stop will rise and it will reduce my risk. It still may get touched. This still may be a losing trade, but the trailing stop will save me money over time. That's the whole idea. And if I can catch a runner, the trailing stop will make me a lot more money than I normally would make. Now, if I just exited at the profit objective. So let's see. Now, what is this profit objective, by the way? So if my risk was 70 points, my profit objective is going to be more. 102 points. That's decent. If I can get 102 points on the NASDAQ, I mean, that's a decent amount. That's $200 of profit right there on one contract. It can do that. That's not a hard thing for it to reach, especially in this environment. So 102 points. Now you realize that ratio between the stop and the profit objective is 1.5 to 1. So I'm losing 1 and I'm trying to make 1.5. Now that's not the best ratio, right? 2 to 1 would be better. But in this environment, especially, I prefer to have a higher probability to take profit, right? To reach a profit objective than try to catch a home run, right? You're better off just taking your money, especially when you're using a prop firm eval account, because a lot of prop firm eval accounts have something called a daily max loss limit that trails. It's a trailing loss limit. And what happens is, what that means is if you're in a position, and let's say that you're up $1,000 in that position, your daily loss limit moves up by $1,000, but let's say you don't take the profit at $1,000. Instead, what you do is you give back some, right? You give back $500 and you get out. So now you're plus 500, but your daily loss limit has moved up 1,000, right? That's called an intraday trailing loss limit. And not all of them have that, but Apex has that. So when you're dealing with something like this, it's best to take your money, right? And they engineered that purposely because they don't want you catching big winners and letting them run. They don't want that because they want to minimize their probability of paying out. Remember, they're doing everything they can for us to lose. So on top of dealing with the market and dealing with our own emotional baggage, we have to deal with a prop firm that wants us to lose. But hey, there's a lot of value. There's a lot of also good things that they provide as well that actually make this effort worthwhile. I've done the research, right? It's not like one day I'm like, oh, I'm just going to do prop firm stuff. I spent a year researching this stuff, watching lots of videos, looking at court documents because people get sued, right? And all that stuff is public. Like I've spent a lot of time like researching it to answer the question, are prop firms worthwhile? And my conclusion is yes. They're not perfect, but they're worthwhile. If you don't know what you're doing and you're a beginner, then they're not worthwhile. You're going to lose. You're just going to donate all your money to them anyway. But even in that scenario, you are. It's a great opportunity to learn and practice with the potential of getting a payout. Oh, look at this! I like that. Let's do it. Let's touch that profit objective so I can bang this thing out. You know what? Like what's most very frustrating is when it almost gets there and then turns around. That's the worst. I'm going to give it another chance, but I'm prepared to bang this thing out. Okay, and take the money. Just take the effing money. I'm trying to let it go to that green. Let it go. Let it go. You can do it. There we go. Nice. All right. Now, you see that red column that's showing up? That's because I'm in counter trend mode, right? And the trend has changed back to bullish on this time frame. Notice the green thing up in the corner? All right, you know what? Goodbye. Out. It's hesitating up here. You know what? F you. I'm out. Sorry, I'm a little emotional. But let's take a look at the account here. All right. So I made $153. That's it. Thought I was going to make more than that. But all right. Now, as you can see, my account is now up $50,152. So remember, I was minus 8 something a week ago because that Friday before I had 3 bad trades. Remember that? For those that watch me, remember that? And I basically blew like almost $1,000 on this account. So now I've made that 1,000 back, or a little like 8 something back. Plus I'm up now. The account is now up at 152. All right, I don't care if you keep going now. I don't care. I wanted to take the profit. So, but we can watch this trade a little bit longer and see. Now that profit that I took there was, it was almost at the profit objective. I exited right about here. So so it was like 85 points that I took out. All right, that's fine. Okay, it's going further, but again, I'm happy to make my money back, right? So now the account is up a little bit. I still have to make $3,000 for this to be worthwhile. But as you can see, every trade is documented, so you can see what I'm doing here. You can see how I'm making my choices. Now, the trailing stop is now in play. See it on the 1 minute. Now, so let's just recap this real quick. I started out. Now I can get out of counter trend mode now because we're in trend mode. Counter trend mode made me. I had a nice profitable trade. See, the trade vanishes because it was originally in counter trend. It was counter to the trend at the time. See that when I turn it off, the trade goes away. That's because at the time this trend was red. It said bearish. Remember that? Now, a lot of people who are following conventional tools or just just judging by what the chart looks like would have gone short here. Remember, the 30-second also gave us a short signal. But I said, I'm not looking for shorts. I'm looking for longs. Remember that? Remember that whole spiel that I had there? I'm looking for longs. Why was I looking for longs? Because we determined that earlier looking at the 1-hour chart. That came first. Then we waited for a confirmation to go long. I pulled up my 1 minute chart and, or whatever, like we waited for this, right? Actually, the trade was in play, remember? And I bought this thing when we retested the blue line, like over here somewhere. Remember that? So I bought it. I got a slightly worse price than the entry price. It went against me a little bit, but then I had an opportunity to get out near the profit objective, right? The long side was obviously the right side. And the Trade Scanner Pro helped me isolate that and confirm it. Now, if I was still in this trade, right, the trailing stop is now reducing my risk, right? My risk was 70 points, and it's now 46 points. So the idea behind the trailing stop, again, like if I was going to be more aggressive, or let's say I had like a nice profit, let's say I was up $1,000 in the account. Okay, you know what? I can afford now, since I have a little bit of a threshold there, right? I have some money there. I can afford now to be a little more aggressive. And if I give money back, well, who cares? I still have, I still have a profit in that account, right? This also applies to real accounts. Then I could say I'll let the trailing stop get touched. So if I give back the money, okay, no problem. I'll let the trailing stop get touched. The only problem with that is, like in a real account, it's no problem. But in a prop account like this, remember the daily loss limit, I would have been up some money and then I'm giving it back. My daily loss limit doesn't go back the other way. So I'm kind of limiting. It's kind of hurting me in a way. Now, using the Trade Scanner Pro with something like Apex, because it has a nicely defined risk and all that stuff, you really shouldn't have a problem with the trailing max limit, the trailing loss limit. You really shouldn't have a problem with that, because this thing should be getting you out way before that becomes an issue, right? Unless, of course, you're too big with your size. Now, I'm throwing around 1 micro lot here, right? So maybe if this week, if the market cools off and these ranges are smaller, then maybe I'll go back to 2 micro lots. Like if I had 2 micro lots in this position, that would have been $300, right? Okay, no problem. But right now, I've been only working with 1 to mitigate the risk. Now it looks like a good idea that I got out, right? This thing may break even or whatever, but we'll watch it. We're going to watch this trade until it closes, just to compare. But you see like how that came about? Our first step was we evaluated the market. We determined that we were looking for longs. Then we went to our smaller time frames. The smaller time frames weren't exactly agreeing, but we were nearer the support. And I went into counter trend mode because the smaller time frame was not in agreement. And I was looking for longs. So I wanted to align with the long side. This concept is a little more advanced, and it can be confusing. If you find that confusing, the best thing to do is wait until the trend turns bullish. Okay, so you're going to miss a bunch of trades doing that, but that's okay. You have to be patient anyway. If you want things to be more aligned and you want to take lower risk trades, then the right thing to do here would be to wait until this becomes bullish, and then you get a signal when that's bullish, and don't go into counter trend mode. Right? So the thing you would do is not go into counter trend mode and just wait. So if you say, okay, I'm looking for longs, you wait until this thing aligns, or you can check a smaller time frame, and the smaller time frame can align, and then you just try to go with that. The thing is, the smaller time frame, like a 30-second chart, is going to be noisy, and you're going to get stopped out a few times. That's why, like, I hesitate to use it here, but I'll use it. I won't go as low as a 15-second chart, and sometimes I'm going to miss some nice trades as a result of that. But you have to have some sort of limitation somewhere. 15-second charts, like, they work great when they work, but when you get stopped out like 2 or 3 times in a row, it sucks. So I'd rather not get stopped out 2 or 3 times in a row, especially when I'm trying to demonstrate, a live stream here where we're trying to beat an evaluation. So I'm being very conservative in many ways. Switching to counter trend mode, like this move here was a little aggressive, but I've mitigated my risk. I'm using 1 micro lot. So I sort of adjusted for that. All right, so let's just see. Do we touch the trailing stop? So far, I would have been given back this whole trade here. Another thing to consider, if you're more aggressive too, is if we touch the blue line again, that could be another entry. And your trailing stop is going to be nearby, so your risk, at that point, you can say, all right, you know what? I'll use the trailing stop. My risk is now cut in half. Or you can say, I'll just use the full stop. That has to be a choice you make it there. Like if you enter at the blue line, it touches the blue line again and turns around, you buy it there and you have a choice. You could use a full stop or you could use a trailing stop, right? But I'll tell you what I don't like about this structure is this is basically a lower high. Now, then if this thing turns into a long from here, it needs to make a higher high. Maybe it does. Now, would this be an entry? I wouldn't enter here. It looks nice, but I'd wait for the blue line. Right? You got to have rules. If you bend the rules too much, you're gonna run into problems. Sometimes it works, but you're gonna run into problems. What makes the Trade Scanner Pro so helpful, in my opinion, is the fact that it lays out these expectations for you. You know, my profit objective. I would not have known to get out in this area otherwise. There's nothing there to really tell you that, right? And that profit objective is just based on these ranges of these candles. It's based on an ATR. So at least I have some sort of visual. Oh, I should probably get out of something. If I had 2 contracts, I definitely would get out of one at the trailing at the profit objective. And then the second one, I would have to deal with this nonsense that's going on right now. Does that make sense? Any questions? Can you guys follow along? Are you guys confused? I want you to be able to use the trailing stop. I'm sorry, the Trade Scanner Pro. I want you guys to be able to use this so that you can get value out of it. I want you to be able to use this on a prop account and beat the evaluation. That's why I'm demonstrating this. So if someone says to me, oh, you don't trade, blah, blah, blah. Yeah? Well, I'm showing you real trades in an account that can be meaningful. Now, if I put money into a real account, I have a real account, but if I was going to put money into an account to trade these, you know I'd have to put at least 10K because of the margin requirements of the MNQ. A lot of brokers, they want like $2,900 a contract, something like that, right? For one contract, just to trade one contract. So 2 contracts, you're looking at $6,000 just to be in a position. Plus, you need a little extra money in there in case you go red, right? Otherwise, you're going to get margin calls. So one of the great benefits to using a prop firm is you don't have to deal with any of those margin limitations. In fact, I can throw on 5, and in this account, I could throw on 6 mini lots, not micros, 6 mini lots. That's 60 micros, 6 mini lots. Do you know the margin requirement on a mini lot is 10 times the size of a micro? So that's like, what is that? What is that, like $29,000 or something like that for a mini lot? So now multiply that times 6. That's how much money I'd have to have in my account to throw around that type of position. I can throw that around right now in this 50K account. It's not really a 50K account, but in this account, I can throw around that kind of size. And if I'm right, I'll have the profit objective beat in one trade. If I'm wrong, I'm going to wipe out the account. But it's possible, right? So which means this, you have to look at this as it's a $2,500 account because that's the max loss limit. So that's really the account value that you have to go by. So what we're managing here is a $2,500 account. So I can't trade 6 mini lots on a $2,500 account. I can't even trade 6 micro lots on a $2,500 account. I can't even trade 1 micro lot on a $2,500 account because the margin requirements are too high. Not with a prop firm. So that's a great advantage. Now, of course, they're very happy to give you this leverage on such small accounts because that's how you wipe out accounts. They're very happy to give that to you because they know most people don't know how to manage that and they're going to wipe out the account, and that's how prop firms make money. Okay, because then you have to pay for another eval or whatever, or do a reset. Make sense? Okay, I don't see any questions. You guys following me here? This trade, look, the whole thing gave it all back. And remember I said here, this is not, if we're going to buy it again, this is not the place to do it. You see that? How do I know that? I don't. I simply have rules. Like if I'm going to enter, I'm going to enter on the blue line. I'm going to wait for this. But right now, I have a profitable trade booked. When I do one and it's green, I'm done. Because I know that the chances of giving it back are high. So if I can get it right the first time, I'm done. No more trades. I don't care if the second one or third one would have worked. I don't care. Because I've been in many situations where it's like you keep going and all you do is give the money back. Especially in this environment. Just take the money and turn the computer off. That's a great strategy. Now, look, so in this situation, if you were going to get into this, if you're going to be aggressive, like I said, you'd have to wait for the next candle to give you like a nice aggressive green candle, right? Notice the trend on this time frame is, it just turned bearish now. See that? It just turned bearish. And I'm still in counter trend mode. So this thing would still be looking for the long. And look, this is what I'd be looking for the entry right here. that green candle. Okay, I'm not going to take it. You can take it on paper or whatever, but this is the long right here on the candle close. So let's see. We have a few seconds, 15 seconds for the candle to close. So you take this long, right? In theory, you could use the trailing stop or you could use the full stop here. The trailing stop is much more attractive risk, only 36 points. Now that's reasonable. Okay, so here's the long. Let's see, what price is this thing at? 19075 or whatever. That would be the long around there. So you're risking around what was that? I said 50 points. 36 points. So if you get a slightly worse price, maybe 40 points, maybe 45 points, that's all within reason. But your profit objective is still the same. This reward risk is much better than the original. If you just bought this thing now, that risk against this reward is like 2 to 1. Okay? That's attractive. So again, like I said, I don't care if this works out. That was a trade signal right there, but I made some money, so I'm done. All right? I'm not going to push it. Does that make sense? Anyone taking any of these trades? Anyone following this? Oh, this is nice. Now I'm regretting it. No, I'm joking. I'm not regretting it. Anyone out there? Let me see how many people are watching me on YouTube. I'm afraid to look. Oh, okay. There's still a couple of people. Any questions? Don't be shy. Have I confused you? Are you like, what is going on here? It's okay. Like, I'm not gonna like yell at you. I'm here to help you. I'm here to give you insight here so that you can do what I'm doing here. Sometimes it may seem easy, but yes, I know I have a lot of experience, so I know what I'm looking at. But what I'm looking at here is really coming from the bigger picture and weighing the probabilities, which is invisible on the chart. You can't see that. Remember, what was one of the things I said at the beginning of the stream? Supports are likely to hold, resistances are likely to break. So far, this support area is trying to hold. They're fighting it, right? This market's trying. So far, I'm leaning on the right side. Now, if this market breaks and we break below this low and this thing goes below the stop here, then that's telling me another story. If the supports start breaking, then maybe we're changing. But in a generally bullish momentum environment, supports should not break. So I can bet on them. What the fundamentals of the trade scanner? Been testing it. Let's have more wins. Well, fundamentals, Henrik, if you want to see, I explain how the Trade Scanner Pro works. There's actually a link in the description where I do a tutorial where I explain the fundamentals behind this thing. It's a pullback tool. It measures pullbacks. It measures the momentum. So what it does is first it identifies a trend, then it looks for a pullback on that trend, and then it looks for changes in the momentum. And once the change confirms, it pops up a signal. But the thing is, it's looking for momentum on your time frame that you're on. So if I'm on a 1-minute chart, it's only looking at that. And that can be problematic if it's counter the bigger picture. So, yeah. And it uses the average true range to calculate the risk and the profit objective. Okay, so that I explain all that in the in that video, but it's basically it measures pullbacks, and it looks to measure pullbacks on the side of the trend, what it defines as a trend on the relevant time frame. So if I'm on a 1 minute, then it's isolated to the 1 minute. Everything you're seeing, it's looking at everything on the 1 minute. This is why we have to use a larger time frame to align our 1 minute with our idea in the larger time frame. So Henrik, it's very important that you come up with your idea first. The Trade Scanner Pro is second. Remember, that's your hierarchy. First is analysis, trend and levels. You do that yourself. Then Trade Scanner Pro is there to confirm your idea And this is what I do every day when I come on the stream. The first thing we do is we do our analysis. Then I look for signals to confirm. Okay? You can't do this the other way around. Don't use the Trade Scanner Pro first. Now, randomly, it generates random signals. Now, the reason why, if you follow the random signals theoretically over time, because it has a reward risk the way it has, you should come out ahead. Not much because you pay commissions, but it's a 1.5 to 1 reward risk. So if you're right half the time, but you're making more than what you lose, you should come out slightly ahead at 1.5 to 1. It's more ideal if you could do 2 to 1 or 3 to 1. But I'm at 1.5 to 1, which you could change, by the way. It doesn't have to be 1.5 to 1. But I set it to that because I want a higher probability of getting out green. And as you can see here, like I managed to get out green, and that was a profitable trade. I would have given that trade back, and I'd still be sitting in this thing, hoping it goes back up to the profit objective, right? But instead, I exited, I took my money, and now I could sit here and talk about this and joke around and stuff. I only use it on top. Okay, cool. So, and yeah, if you have another strategy, again, it's a confirmation tool. So it coincides with other strategies. So if you have some other way to judge the market and you need confirmation, this tool is ideal for that. So obviously, if you have another strategy, you must have a little more experience. You know, the mistake that beginners make with this is they just pull this thing up, they see a bunch of lines in their chart, oh, there's a signal, and they just jump in without any thought or any analysis or nothing. And you can't do that. It's the same as taking a random candlestick. That's like taking a pin bar, a pin bar, and just buying it just because there's a pin bar. You can't do that. You're playing a very random game when you do that. Okay? So anyway, but a lot of thought has gone into this, and the goal of the Trade Scanner Pro is to simplify your decision-making process, which helps a lot, especially in situations like this. Like, where do I get out? How much profit do I take? Well, it answers all those questions. And if you want to ride a runner, it gives you that option as well. You could turn the trailing stop off if you want, but I think it's a very valuable thing to have, especially if you're not using a prop account. All right, you guys. So any other questions? Because I'm not taking any more trades. This trade, by the way, would have been green. And I would have been at least about 1 to 1, almost 1 to 1 over here at this point, relative to the risk. So remember, markets are highly random, especially on small time frames. So we have to be able to place a probability on something and then work with that. It's very similar to playing poker. So if you want to sharpen your decision-making skills, I always recommend learn how to play poker. I know it's a card game, and you're like, oh, what does that have to do with the markets? A lot when it comes to the decision-making process that's involved. Because in poker, how you win in poker is, well, part of poker is bluffing. We're not bluffing here. But part of it is risk management and placing probabilities on what cards can come out next based on what you have, based on how other players are betting, and based on where you're positioned at the table, right? So there's all these things that line up that can give you some sort of probability of, okay, there's a better chance of this coming out than this, or there's a higher probability that this guy has pocket aces because of the way he's betting, versus what I have. Right? Because I don't have pocket aces, right? So you put a probability on someone. And that really skilled players understand the mathematical part of the game. So this is very similar to that. Of course, the markets are more complex, but you can do this. There are simplified ways you can do this. The more simplified you can do it, the better, especially when you're working with small time frames. We don't have time to read through reports and analysis, and we don't have time for that nonsense here. It's momentum is bullish. I want to work on the long side. That's it. I'm taking a small bite out of some momentum. That's it. It's got to be that simple. People overcomplicate things on top of, the emotional baggage and all the other stuff, and prop firms know this. Prop firms know that it's a good bet to bet against the retail trader. Retail traders are mostly operating on misinformation, and they have a ton of emotional baggage. They have no idea what they're doing, no idea what they're up against. But they're fed constantly information to give them hope so that they trade more and this and that. Prop firms know this. This is why it's so profitable to be a prop firm. They make a lot of money. Okay? A lot of money. So they know that they have to pay out some people, but they know that most people are just going to lose. So it's a good bet. Look at this trade. Look at this. At the profit objective again. Man, that would have been nice, right? But I stick to my plan. I made some money. I'm not giving it back. But this would have been nice. So as you can see, what you learn here is you can use this as a second entry. In fact, when I entered the trade the first time, it was a second entry, right? I was not able to get in over here because by the time I pulled the chart up, this trade was in play and I got in on a secondary entry. So this is the third time it touched the blue line. So you can use that without having to wait for another signal. See, but that's a little more advanced. I don't have that explained anywhere. But I've had this situation numerous times on my streams, so you guys should be learning. All right, so any questions? Henrik, thanks for your question there earlier. Any questions? No questions? All right, you guys. So I will be back at 3 p.m. Eastern time, where I will be doing my analysis stream, where we'll be talking about Bitcoin and altcoins and S&P and NASDAQ, all that stuff, and we'll see how the day transpires. But we will do my weekly analysis to get a sense of what scenarios are plausible this week. All right, so join me for that. That's at 3 p.m. Eastern time. Other than that, I'll do this again. We'll come back on Wednesday and we'll try this again and see what we can do here. All right. So again, thank you for watching. I hope you learned something from the stream. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And again, thank you for watching.